Assalamualaikum warahmatullahi wabarakatuh. Today I'm gonna talk about my individual assignment, which is the journal article review. The article chosen by me entitled The Impact of Monetary Policy on Islamic Bank Financing, Bank Level Evidence from Malaysia. Quite interesting, right? Okay, my name is Muhammad Asnawi bin Muhammad Jamsari. There is my ID 2019200766. This assignment is prepared for Puan Siti Nur Fatana binti Abdul Hamid, and I am from AM 1102B. That is my class. Okay, without wasting any time, let's check my journal article review. Okay, in the first place, let me introduce you my journal article review. Okay, the article chosen entitled The Impact of Monetary Policy on Islamic Bank Financing, Bank Level Evidence from Malaysia. As I said before, it's quite interesting, right? Okay, we see. The aim of the paper is to investigate the impact of monetary policy on Islamic financing behavior while taking into account bank-specific characteristics. The other aim of the study is to provide an understanding of how effective Islamic banks are, performing their roles as capital suppliers for businesses and entrepreneurs. As we all know, unlike the conventional banking, the Islamic banking have other type of principle. The standard principle of Islamic banking can be defined by the following characteristic. The first one is risk sharing. What is risk sharing? Risk sharing in which financial capital providers and entrepreneurs should share business and financial trades in return for profit. Money as a potential that is become real capital only when it enters hands with other resources to carry out productive activities. The second one is prohibition of fanciful attitude. Bank Islamic financing also discourages holdings and prohibits bank transfer with extreme uncertainties, gambling risks, and Sharia-approved operations that only those business activities that do not break the rule of Sharia are eligible for investment. The article is based on bank-level evidence from Malaysia. This makes the article more interesting because we are the citizen of Malaysia, right? Okay. Malaysia Islamic finance industry has been around for more than 30 years. The enactment of the Islamic Banking Act 1983 made it possible to create the country's first Islamic bank, which is Bank Islam Malaysia Berhad. The establishment of Islamic finance in Malaysia in the late 90s is not surprising because as we all know that Malaysia is an Islamic country because majority of Malaysian is Islam. Malaysia is very suitable for banking Islamic financing. Okay, now we go to the background of the article. Okay, the name of this article, The Impact of Monetary Policy on Islamic Bank Financing, Bank Level Evidence from Malaysia. Name of the journal is Journal of Economics, Finance and Administrative Science, Issue 46, Volume 23. The publisher of this journal is Universidad Isn, which is Escuela de Administración de Negocios para Graduados. Number of pages of this article is 16, which is from page 306 to page 322. The international standard serial number of this article and digital object identifier is this. I won't say because it's quite complicated. Okay. The author is Muhammad Zulil Kibri. He is from Islamic Research and Training Institute, Islamic Development Bank, Jeddah, Saudi Arabia. The methodology used in this article is panels regression methodology covering all Islamic banks in Malaysia. The value from this article is problem and challenges relating to Islamic financing must be resolved. Oh, there is a typo here. Okay, keyword for the article if you want to search it at easy access or other academic is Malaysia, Islamic bank, bank financing and base financing rate. The paper type of this article is research paper. Okay, now I will explain to you the policy impact. The first impact of this policy is share of Islamic assets in overall banking system is growing. As we can see, HUD 2010 state Islamic banking has become a substantial and fastest growing industry during the last 4 decades. Significant increase in the share of Islamic assets in the overall banking system from around 7% in 2006 to 20% in 2012. As at the end of 2012, the Islamic banking system has acquired a total RM 119 billion in assets, or about 20% of the total asset of the banking industry, which is RM 0.6 trillion. To date, Malaysia has 16 Islamic banks. Let me state some of them. As example, Alliance Islamic Bank Berhad, M-Bank Islamic Berhad, Bank Islam Malaysia Berhad, Bank Muamalat Malaysia Berhad, CIMB Islamic Bank Berhad, and many more. The financing modes that been listed in the figure 2 in the articles are buy Bitaman Ajilan, Ijarah Tuma Albay, Ijarah Murabaha, Musyarakah Mudharabah, Istina, and others. It shows that the buy Bitaman Ajilan and Ijarah Tuma Albay dominate the composition with 32% and 23% respectively. What is buy Bitaman Ajil? Buy Bitaman Ajil is a house financing concept that refers to the sale of assets or goods on deferred payment at a fixed price that includes a profit margin to a seller. This concept is commonly used in the financing of assets. Customer identifies the asset they wish to buy and reach the bank to finance it. Ijarah Tuma Albay is a hire purchase. In addition of buy Bitaman Ajil, Ijarah Tuma Albay is a hire purchase. What is the meaning of this? It refers to how the parties enter into contracts that enter into force on a serial basis in order to form a complete list or purchase transaction. The writer also states the other impact of this policy is illustrate a high level of correlation between Islamic-based financing rate (BFR) on retail financing and conventional lending rates on loans in Malaysia. I agree with this because Islamic bank financing is absolutely interrelated and related to conventional bank financing in terms of lending. Between 2009 and 2012, the ratio of the traditional banks-based lending rate to the Islamic bank financing rate was around 76%. Consequently, Although conventional and Sharia-compliant Islamic banks operate in a dissimilar banking environment, it is shocking that the Islamic-based financing rate closely monitors the interest rate offered by conventional banks in Malaysia. This is because there are several differences between Sharia and conventional banking environment, and the first one is basic aim of establish. The basic aim of establishing an Islamic bank is to promote and encourage Islamic principles, while conventional banks are profit-making organizations that are generally not based on religious principles. Second, expenditure. Expenditure in a bank that invests in conventional commercial bank is focused on a guaranteed principal and a fixed amount of income. The concept of investment is different on the other side of Islamic banking. While the customer deposits the money in order to earn extra income for his saving, his principal and return are not assured. Okay, another impact of monetary policy on Islamic bank financing is it made the performance of Islamic banking is as good as conventional banking. As we can see here, Islamic banking is no longer seen as a business entity seeking only to fulfill the religious obligation of the Muslim community, but more importantly as a business that ineluctably in need of winning over customers at the same time as retaining the old. Wilson, 1995. The interest rate has long been recognized not only by classical and neoclassical economists, but also by contemporary economists as one of the factors that determine the level of saving in the economy, and thus the interest rate has a positive relationship to saving. Harun 2001 find a similar positive relationship between the rate of profit declared by Islamic banks. In other words, Islamic bank customers are directed by the concept of profit maximization. As there is no predetermined rate of return associated in the Islamic banking system. Because depositors in Islamic banks have similar attitude to conventional banks, the interest rate will continue to have an impact on the operation of Islamic banks. The financing activities of Islamic banks are commonly carried out using the participatory PLS model. PLS is the profit-loss sharing technique used by Islamic financial institutions or Sharia-compliant institutions to abide with the religious prohibition on interest on loans to which most Muslims adhere. It is well documented in the literature that Islamic banks follow their conventional counterparts in the creation of assets through non-PLS debt, like instruments with a predetermined fixed rate of return. Survey and Charab 2011 also compared the empirical behavior of conventional bank deposit rates and the rate of return on retail Islamic PLS investment account in Malaysia and Turkey. And the author state that the research shows that the conventional bank deposit rates and the PLS rate of return display long-term co-integration, and the conventional bank deposit rate generate return on PLS account. In addition, the time varying volatility of a conventional bank deposit rates and PLS return is correlated and statistically significant. Because of that, no wonder why Islamic bank finance is at the same level as conventional bank finance. Alright, the last one is size, liquidity, and capital impact in Islamic bank financing in Malaysia. Following Gambar Korta 2005 and Zulhibri 2013, the three parameters for bank characteristics are size, liquidity, and capitalization. The result of Table 2 to 4 in this article also show the importance of the bank-specific characteristic with regard to the attitude of bank lending. This indicates that size is a major factor that characterizes the bank's financing reaction to large banks, which is expected to minimize costs. The result is also consistent with Fazlan and Zulhibri, 2009, implying the major financial institutions in Malaysia have a higher level of technical efficiency in their activities and an inward U-shaped behavior. In the case of liquidity, the results show that the liquidity coefficient is found to be positively associated with bank financing between 1.16 and 9.47. Only banks that have a bigger or larger share of liquid assets can protect their lending relationship. This evidence seems to indicate that Islamic banks are able to defend their financing portfolios by sketching on their liquid assets and therefore less likely to reduce financing, while those banks are more likely to have a better access to external finance because of their size to retain their preferred liquidity ratio. Capital. It seems that bank financing is positively linked to the capitalization of the bank or to the structural system of the bank capital. The data demonstrate that market players may see highly capitalized banks as less high risk. As a result, it should be more expensive for poorly capitalized banks to finance externally. Alright, we almost done. As a conclusion, as we can see, there are several monetary impacts that have been listed by the author in the study on Islamic bank financing. In my opinion, I strongly agree that share of Islamic assets in overall banking system is growing and illustrate a high level of correlation between Islamic-based financing rate (BFR) on retail financing and conventional lending rates on loans in Malaysia that been explained by the author. This is because I believe Malaysia is a prospect place to Islamic bank financing to grow. This is because Malaysia is well located in the core of Southeast Asia and is also a member of the Association of Southeast Asian Nations, or we call it ASEAN. Amazing business opportunity exists in most industries of Malaysia, not only for geographical advantage but also for dynamic political leadership and stability, a friendly atmosphere for foreign direct investment, cross-cultural diversity and many other viable aspects. Moreover, a significant number of empirical studies has explored the bank lending behavior for conventional banks for the past decade, while study on Islamic bank financing behavior remains scarce due to lack of bank-level data. However, the authors still can make the study effectively using bank evidence and data from Malaysia. That's all from me. Thank you for watching and listening my presentation.